Let's go take a look at our CTV screen and talk about some of these trades that you guys took. All right, so let's take our 3-minute chart right here. You can still see I still got my boxes in my. This is our 15-minute orb that we had this morning. This is where I took my trade right here, coming in right here. So we hit down, we pulled back, went all the way back up to VWAP right here, and the opening range. The bottom of that right here, and then we failed, and then I jumped in on this right here whenever we got that candle there. I was watching the 2-minute also, and that was what my trigger was right there. And I did realize that we had a level right here when I jumped in, and actually pulled back just a little bit more, but then it followed on through. And that's mainly because we had negative momentum with the RSI below the 50, cycle oscillator was pointed down, and all of the indicators were lining up like that. So that was why I took that trade right there. And then, it hit my profit target and all. And then we started hitting this level down here, and it started to reverse. We were watching this. And then we got a moving average cross and came back up to yesterday's close. I mean, Friday's close, came back up there. And then we chopped around a little bit. We did break that, but we're right here at VWAP for quite a while. But cycle out, and I mean, this was a move right here. So you could have jumped in that. If you took that to the upside, probably taken that. I mean, you could have taken it right here after the moving average cross would have been the technical entry or whatever. You'd have had a little bit of heat right there. You could have pulled back, taken the pullback. You could have gotten it here. I mean, so we had blue dots. That right there is where the moving average, the RSI, crossed over right there. After we had this pullback, and we took out the red right here. This green took out the red candle, not the wick, but the body right there. And then on this candle, that's where you got the RSI cross. So that would have been the classic entry right there. You were above the level here, but, we just kind of sat here and chopped. So that would have been frustrating. So, but I mean, that would have been an entry. The only thing that I would not have liked about this, and, why I did not trade it, especially because it was just right here at VWAP, and that's an equilibrium point. And so we ended up, just kind of cycling. And this is the bird cage that I had right here. I was looking at it's like, here's yesterday's close. We broke that, and then we were wicking up here, but we couldn't break it. And I said, I'm not really going to be interested until we can break out of this and hold VWAP and hold the 20. So, and we did do that. And that was going into lunch and blah, 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 blah. So I didn't trade any of this, and I was out of pocket at that time. But the thing with this is we were above the 20, and that's when we were above VWAP and we were above the 20. And that's one of the things that I look at, as well as Kate talks about this. Whenever we come to the 20, price likes to stretch away from the 20, it gets far away, and then it pulls back to the 20. If it's going to continue up, it'll reverse off the 20 and then continue up. And that's kind of what this did right here. So it came up to the, we consolidated around the 20 in VWAP. Then we started breaking away. So the moving average is starting to move here. We had a dusting of yellow dots right here around 11:30. That was the time of day. This move right here, 11 o'clock in this window. So that was the time of day going into here, 11:30, 11:45 right here into lunch. Not much of a move right here, but see how it did come to the 20. It moved up. Then we got this hammer candle right here, or inverted hammer, or tombstone, whatever you want to call it. But it's a reversal candle, and it pulled back, and it came back. This is the key thing right here. It came back to VWAP and the 20. Moving average cross to the downside, and then a moving average cross to the upside. So it's kind of like came down, hit the 20, reversed. And we had two candles going into lunch right there. Short run right there. Not really a whole lot. Maybe a convert if you took that right there, because that was right there at the 48.94 level there. You could have taken the 50, 55s, and it went all the way up to 56. So it went up 5 points, and that was definitely enough to sell a debit spread, and maybe enough for a break-even convert right there on that one. But that was, a short run right there. But, the thing is, if you did take that and you were looking for a full convert and all like that, you could have taken it. If it pulled back, if you put your stop, Take it right here and put your stop down here at VWAP or the bottom of the reversal candles. It never broke that. And it went all the way up here. It wicked up to this level at 68.60.5 a couple of times. So that would have been enough for you to do a convert on that. So, but that was going into the lunchbox. But that was a move right there. Then what did it do right there in the middle of lunch? It pulled back to the 20. Well, actually pulled back to VWAP, wicked off of VWAP, and it wicked below the 20 right here. But it didn't, and it did close below the 20, but it closed above the VWAP. So this is kind of a little buffer zone right here. That's why I always talk about, zones rather than actual levels. I look at levels, but I realize that there can be some deviation and, margins of error around those levels. And that's because people have got stops, placed just below them or just above them and all like that. So, they'll get hit in those ranges there. Now, there's algos out there that are triggered to buy or sell based on VWAP. So it came right down to VWAP, kind of wicked a little bit below it right there, and then it shot back up. So, I mean, there are those algos that are out there. And then it came down right here. We got the reversal candle. It came down, down, down. Reversal candle. We got a moving average cross, and it moved on up. This was a slow one here. So, and it just didn't move a whole lot. This one probably, if you took this, let's see, that was at 52. It only got up to like 60. Well, that's 10 points. I mean, you'd had to have patience with this because it was a slow mover here. But if you came out, got in right here around the moving average cross, you could have taken it to the upside out of the lunchbox. So it would have been your out of lunchbox trade right there. You would have gotten probably the, say like the 55, 60s and then converted to 60, 65s. It did get up to almost 65. So you should have been able to, if you took that, you should have been able to get a full convert on that and make a profit on the credit spread. If you got a good price on your entry right here and took an entry. If you waited, for more confirmation, then, that made it a little bit more sketchy, but it was still an up move. Now it got up here and then it started pulling back. Where did it go? It pulled back right here to the 20. So that's why I always talk about the 20. But see, notice this trend. It's been going up and up and up, pulling away from the 20, getting close back to it, pulling back to it, stretching away, come back to it, came back to VWAP right here. Then it ran away, started getting further and further away from the 20, and then it pulled back to the 20, stretched away again right here. And then we got a red bar. Well, we got red bars on these other ones since we stepped up here. But we got a red bar right here. The thing that's different about this one is, look, you were going from sea of blue with sprinkling of yellow on each of these pullbacks. So this is kind of a heads up right here. We got blue. So even though we're kind of consolidating right here and hadn't broken out of this area, we had a pullback and then we went blue again, compression, a little bit of a pullback here, more blue, pullback, blue, pullback, and then we got pretty steady period right here of all blue, and that was this nice run that we had here. Look at your moving averages. They were all stacked together, no crisscrossing or anything like that until we got right here with this moving average cross. And then we started fading and losing structure here, but it came down to the 20 and it held. So that was still just a pullback. Came back right here. See, the RSI was up, started fading. It looked like it was going to cross, but it never crossed the 50. It got down here and it bumped it, but we never got a cross right here. Never got a vertical cross. So that's, whenever you see your RSI, running around at the top half or the bottom half, look at your trend, see which way it's going. If you're going to be down here below the 50, you're going to be trending to the downside. See, like this right here, this move, RSI was down here. And then you get these little pullbacks. Watch for it to cross the 50. If it doesn't cross the 50, that's another clue right there that it's probably a pullback. And then look for a sprinkling of your, in a yellow C right here, look for a sprinkling of blue dots right here, which we got, pullback. And even though it looked like it was going to run, the dots never went fully blue. So that gives you some, some clues right there that it's probably not going to get continuation. But then you still, get the pullback and everything, and then you still got these levels and all. So, I mean, you still have to watch your price action and all like that. But, when you see these failures, that can give you a heads up that there may be some more downward action. And then look at where your RSI is and look where your cycle oscillator is. And it looks like you've got some more room to go because it hadn't got down to the extreme yet. And it did, in fact, have some more room right here to go to. And then we came down here, got in the extreme, had the cross down here, turned green, moved up, and we actually crossed over here. We went to a sea of blue, green ticks, upward Momo, and then the move up here. So that was, you could have taken that. If you did this classically and just were aggressive on it, it'd be coming down here. You got the reversal candle, confirmation candle, boom. You could have taken it right here. Price was above the 3. We had the moving average cross right here. I've got this set. This is the 3-5 moving average cross right here. So whenever price actually closed above the 3 and above the 8 right here, but we got the moving average cross right up here. I think that's let me check that real quick. I think I've got that should be the 3-5 cross right there. And you see it kind of stretched. So whenever it got there, yeah, that was when it was. And then price was clearly above that. But you could have taken it early right here when price did break above the 3 right here and above the 8, which is my dashed green line right here. That would give you an early entry. Didn't have everything. You didn't have the RSI cross right here, but the trend was up. The cycle oscillator was at an extreme, and you had this cross here, so that can give you some confidence there. And then when you got right here, mine would have been probably to let this candle close and then moving average cross. I'd have probably been looking at the 2-minute over here, looking at the 3-minute, because I'm sure, the 2-minute is going to give you an earlier entry on that so that you could have done that and you could have gotten in probably on the moving average cross of it too with this move. And that would have given you a little bit more padding there. And then, but we were kind of leading up to this move right here out of the lunchbox. And then, this is the 1:15 time of day right here. Pulled back to the 20, came back up, and then we started setting up really to break structure right here because look at your cycle oscillator. It was coming up to the red line right here, then it came down, another green attempt, moved back up to the red upper line, upper boundary right here. Then it pulled back, and then it put in a lower high right here. So even though we were coming up, we were getting some divergence because you put in a little bit of a higher high right here, but you started putting in some lower lows right down here on the cycle oscillator. And then we got this red bar right here. And then moving average cross came down. We broke the 20, but we're still above VWAP. So, I mean, there's still a bullish tone here, but we're breaking structure. And then we came down and we actually started trading below the 20, which that is a tone shift right there, right here. And then cycle oscillator started moving down to the lower extreme here. We started getting these moving average crosses or the vertical crosses on RSI. And the RSI actually moved below the 50 right here. And you can see that. I've talked about this several times. Whenever we're trading above the 50, you'll notice that your RSI is moving and trading above the 50 on the RSI line right here. Whenever you are trading above the 20 on your price chart, and when you break the 20 to the downside, notice that the RSI tends to move below the 50 on the RSI. So that's and the reason that is because the 20 is kind of the mean. This is actually on this one. I've got the exponential 20 on this one. If I had Bollinger Bands, I would have this set at the 20 simple. And it's not that I didn't set this at 20 simple, but I think when I put it up there, I just inadvertently put it on the 20 exponential, just, out of habit. And if I've got Bollinger Bands on it, normally I don't put this on. I'll use the 20 simple of the Bollinger Bands, and I'll turn it, whatever color I want, and make it a little bit thicker, or maybe dashed or something like that, and use that as my mean, because I never usually like to have the 20 simple and the 21 or the 20 exponential together, because they're almost the same. And they tend to kind of get butted up against each other and kind of can cause some confusion. So which one is which and all like that. So I just don't deal with that. But this right here is a key thing when we broke below the 20 and then we started trading below it. You can see where we were coming up here in the uptrend. We were coming up, pulling back to the 20 and then bouncing off of it, continuing up, pulling back to it, and then trying to continue up. Then when we reversed here, we started doing the opposite. We're pulling down, then we come back up. See all these wicks? They came right up to the 20. We pulled back. We had a level of support right here at about 51.64, where we had the green bar right here. And that held for a while. Then we pulled back up to the 20 right here, came back, and we broke that level, put in a hammer candle here, and went back up to the 20. This is towards the end of the day. So we really just kind of started playing back and forth right here.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.